This is the report for the 14th of June. Events here. Now, these are few important things that actually happened through yesterday, and I would like to discuss it in detail because that will affect the overall decision making for the Fed in this next FOMC meeting that's going to happen early tomorrow morning. Now, yesterday's result, the year-on-year came in at 4% versus 4.9. This is a good thing. CPI month-to-month came in at 0.1 versus 0.4. This is a good thing. Core CPI now, this is the one that the Fed is looking at because they want to, not to say oil and food is not important, but they want to see if you remove that element away, what about the other things? Has it come down? So what we see is actually it is the same, and this is this question mark right over here. Okay, is inflation really sticky? How bad is it right now? Why is it not coming down, as expected? Okay, so what we have right now is the year-to-year and the month-to-month show inflation has cooled down to its lowest annual rate in more than 2 years. Now, this is good so far, but if there's a sticking point, like I said, then it would be the core CPI rising by 0.4 and year-on-year coming at 5.3. Now, this is much better because the previous one, if I'm not wrong, was just about, it came down by 0.2%. I can't recall. I know it's a much lower over here, but I'm not that optimistic because, it's proven sticky in the 5% range. With this guy not even moving and staying still, that is not good. It's still not something that I can hew a sigh of relief and say, yeah, I think, we have a chance that we still need to see more data. I need to see more data of this guy coming down than I believe. So, but with these two datas out like this, right, I believe that the pressure on the Fed to raise rates is eased for the time being, awaiting more data. The PCE data, the other data, they can wait for that. But for the time being, I think it should be enough for them. Okay, so but more, but with this, you still keep people at the edge of the seat. What's going to happen next in July? What's going to happen next in September? This kind of stuff will still play in the minds of the investors and traders. In a nutshell, if you want to put one word to it, I will call it uncertainty. It's still going to be around. So with the labor market, so I jumped in and looked at the labor market. It's still strong because if you look at the survey done by or surveys done, right, we have 56.4% people in the US believe that they can find new jobs if they lose their current jobs, and 40% people believe unemployment will go up 1 year from now. So it's still lower, and both sets of data actually show a decrease than previous months. And it's more people believe that if today they resign, they can find job easier. And if you have 40%, which is also much lower than last month, if you have 40% believing that unemployment will go up, that means you have 60% believe that unemployment won't go up. So they are really optimistic, and this optimistic feeling can be translated whereby they continue to spend and not save. Remember previous data I've shared with you all. Basically, a lot of these US citizens, they don't have much in savings. Most of their money goes into the stock market and other things. Okay, and into the spending, as opposed to Japan, right? So with this thing, we can only sum up one thing, is that with the core inflation not showing much improvements, and continue to be sticky, it will actually take some time to to some time for inflation to come down at the rate expected by the Fed. So this one we have to know for sure. But on the bright side, I think today we, there is a 95.3% chance that the Fed, right, won't be hiking its rate this time around, okay, for the June meeting. Maybe this morning it rise a bit, but it's still single digit. Now, this is quite a strong rise from 79.1% when I did this analysis on Sunday, and today it's at 95.3. So this is quite in a way we are certain we won't see a Fed rate hike already for the time being, okay, for this month at least. But there's always a but there. I want to share with you something else. You could also see this, which means look over here. We may not have a rate hike in June, but the probability of a rate hike is rising for July and September. And then I know it's a bit far away, and usually it doesn't really carry much weight. The November one is also rising over here. They were in the 50s. This is now 60s. This was 36.5, now rising to 45.2, which also means one thing. One thing is that the market is expecting 2 more rate hikes. If they pause here and inflation is going up, expect 2 more rate hikes right here. So I don't know. I don't see this as a really good thing. So if they do a 25 basis point rate hike and then they do it twice, what would that mean? We'll be probably staring at the US rate by this year at 5.75%. That is really, really high. And given the debt, the debt that they are pushing it, they're going to spend more after this debt ceiling has been raised. I don't know how America is going to take care of the US dollar currency. Okay, so all I can say is that I hope the Fed manage it well. It's not going to be easy, and yeah, if they do this in July and September, my expectation of the stock market will be down. Even though it's up, it's down. But I see it as an opportunity, not something else. Okay, let it come down, then we will go for it. Okay, those are my thoughts. Okay.